Okay, we're going to go ahead and get started. We've got a full program tonight. So this is financial literacy for small business. This is session 2. We had one session last week and we have one more to go. Just to go over, last week we went over the startup phase of the business, how to price your goods and services, and talking about startup costs. Tonight, we will talk about how you start to manage your finances during the growth phase of the business. And then next week, we will consider that your business is mature and that you're moving forward. And we'll talk about some things you can do for yourself as well as your employees so that you can move the business forward or exit it, whatever you would like to do with a successful business. Tonight, we have 2 guests. Sterling Porter is a CPA and he works for Shaw University also. He's going to talk about financial reporting. Bill Davis is going to follow him with some practical experiences because Bill has worked so much with small business over the years. And then Tabitha Lewis is going to talk about tracking expenses and how you can work well with your accountant or CPA. And she's going to give us some tools to do that. And Dr. Angie is going to give some practical experiences around that. And tonight we were supposed to have Darlene Thorne here. She's not going to be able to make it tonight due to an emergency. So each of us will share some of our experiences around how we practice self-care as we grew our businesses in the past or as we're doing now, and our plans for the future. Now we're gonna have Sterling Porter. He's a CPA. He's assistant professor at Shaw University School of Business and Professional Studies. And Sterling, you can go ahead and share your screen.
All right, well, good evening. Thank you for having me tonight, and I look forward to giving you all this presentation. I hope it's very helpful. So first, let me go ahead and get my screen set up here. Let's see. Okay. So share. All right, so if you cannot see my screen, please let me know. So what I wanted to talk to you tonight about is what I call small business accounting. All right, understanding the financial statements. As Ms. Williams said, my name is Sterling Porter. I'm a CPA. I'm dual in the state of Georgia and the state of North Carolina. I'm currently an assistant professor at Shaw University. Just a little bit about my background. Nearly 20 years of experience in the accounting field. I began my career at PricewaterhouseCoopers, one of the big 4 accounting firms. I mentioned I'm a CPA in Georgia and North Carolina. I owned and operated an award-winning accounting firm in Georgia, and sold that business actually last year. So I sold the business and decided to become a professor at Shaw University. So that's where I currently am, teaching accounting, principles of accounting, also advanced accounting. I also teach professional development. So those are my areas of interest right now. So let's go ahead and dive into it. Let's talk about financial reports. Financial reports, basically your balance sheet, your income statement, and your cash flow statement. Okay, those are your 3 main reports. There are other reports, which I'll talk a little bit about later. But the next few slides, I'm going to dive into what these reports mean and how they're important to your business. But before we dive into that, I wanted to talk about basis of accounting. Okay, what are your bases of accounting? What do I mean by that? So there's really 2 main ways you can account for your transactions in your financial ledger. One, you can use cash basis. And basically what cash basis says is for revenues, you recognize revenues when they're earned. Not when they're earned, I'm sorry, when you receive the cash for them. Excuse me. You recognize revenue once you receive the cash. You recognize expenses once you pay the expenses, right? Simple enough, right? Cash changes hands. You book a journal entry, you recognize it in your books, right? But then you also have accrual basis. Accrual basis says you recognize revenues when earned, right? So it doesn't matter if you receive the cash. Once you've earned the revenue, you record it in your books. Expenses, you recognize when they're incurred. So regardless of whether you've paid for it, you recognize it. Okay. Most small businesses like your businesses will use cash basis, right? Cash basis is very simple. It's the simplest method to use. And actually, most businesses aren't required to use accrual basis until their revenues exceed around $26 million a year, right? Of course, big time corporations use accrual basis as well. But for the most part, cash basis will be what you will use. And as a CPA for my clients, I would always recommend cash basis unless they had a requirement of some sort to use accrual. All right, so now that we've established the basis, let's look at the balance sheet. So what is the balance sheet? The balance sheet can also be called a statement of financial position. It gives you a detail of what you own, what you owe, and your net worth, okay? The formula, the accounting equation, right? The main accounting equation, assets equals liabilities plus owner's equity, okay? And we'll dive into what these items are. Your assets are what you own, right? Your main asset, your first asset that should be listed on your financial statements is cash. How much cash do you have? As a small business, cash is king, right? And as a CPA, I always tell my clients, hey, your bank reconciliation is gospel, right? If you reconcile your cash account to your bank account, then I have confidence that we've accounted for every transaction, right? That includes your bank, that includes your credit card accounts, everything. If all of that is reconciled, we have confidence that we've accounted for everything. Accounts receivable is another one. Accounts receivable, basically, if you sell something to someone and they haven't paid you yet, they owe you money, that's an accounts receivable. Now, that's more under the accrual basis, but you can have receivables, okay? Fixed assets is another one. Fixed assets are basically your big ticket items, right? Your equipment, vehicles, you buy a building, maybe, your big ticket items. And then some other assets I could think of, inventory. If you sell goods, you have inventory. Prepaid expenses, if you pay expenses in advance, those are some assets. Basically, these are the things you own, right? Things that are due to you. What about your liabilities? What you owe? Accounts payable, right? If you buy something from a vendor and you have yet to pay them, that's accounts payable. Loans, debt, those are your liabilities, okay? And then lastly, your owners, shareholders, or stockholders' equity. And basically what this is your net worth, right? Your assets minus your liabilities. So basically your retained earnings is the cumulative amount of net income and your losses minus dividends. So we'll get more into what that means in a second. So what I'm going to bring up now is I'm going to bring up a sample balance sheet. Okay, let's take a look at that. So you see, this is the first half of the balance sheet. Your assets, right? You see your checking account, your checking and savings, and your petty cash. So your total cash. And then you'll see accounts receivable. We talked about that earlier. What about your other assets? Undeposited funds. What undeposited funds is, really, we should never really see this, but say you receive a check and you have yet to deposit it in the bank, right? You still record it as your cash. You just have yet to deposit it. So we still keep it here, right? Inventory, employee advances, and then we get down to your fixed assets, furniture, equipment, vehicles, construction equipment. So this is a construction company, the sample I'm using, right? Land, accumulated depreciation, which we'll talk a little bit more about later. Security deposits, right? So all of these are your assets. Now you see total assets, you see $536,000. I know what you're thinking. My business is nowhere near this big, right? $536,000 in assets. But here's what I want you to take note of. Look at the liabilities. Accounts payable, they owe vendors around $13,000, right? They have a credit card, sales tax payable. But look at the long-term liabilities. Look at all these loans, and even including a mortgage, right? Their total liabilities are around $435,000. So what you see here is that a lot of their assets were generated by debt, right? So if their assets are generated by debt, they're probably not making a whole lot of income. All right. And what I mentioned with equity being your net worth, right? That's what you really want to look at. What's the net worth of the business? This total equity here, $101,000. So it's a relatively small business. Okay. So I saw someone raise a hand. Do we want to take questions now or at the end here?
We're going to have them drop the questions in the Q&A.
Okay.
And we'll take them at the end.
Okay. Not a problem.
Thank you.
Not a problem. Thank you. One other thing I wanted to note is that most of you probably use QuickBooks or, are thinking about using QuickBooks. QuickBooks gives you the ability to easily switch between cash basis and accrual basis. So this right here is accrual basis, right? Because you see the accounts receivable, you see the accounts payable. You can easily switch this to cash basis in QuickBooks. Okay. So that is the balance sheet. Let's move forward. Let's look at the income statement. So the income statement shows your revenues and expenses and net income. Of course, your revenue is money generated from sales of products and services. Your expenses are expenditures that are ordinary and necessary to your business. Okay. So let's talk about some of these expenses. And I know Tabitha, I believe we'll get into this a little bit later. Let's talk about some of these expenses. Meals and entertainment. I guess if you want to put it in the chat, somebody tell me, is meals and entertainment fully deductible? Trying to see if I can see the chat here. Hold on a second.
Someone said no,
Okay.
no, not anymore. Yes, no.
Okay. About how much is deductible?
This year it is, yes. Not alcohol.
Well, so meals and entertainment, meals are 50% deductible. Okay. Entertainment is no longer deductible at all. Some companies used to buy like tickets to games for their clients and things like that, right? And they could write off half of it. We no longer can do that, unfortunately. What about vehicle expenses? What's the best way to recognize vehicle expenses? What do you guys think? Can we write off our vehicle expenses?
Someone said mileage. Yes.
Absolutely mileage. Absolutely mileage. That's right. Mileage, for my clients, I've recommended 99% of the time, take the mileage deduction. Okay. It's much more complicated to try to buy your vehicle under your business name and try to write it off in full. Unless you use it absolutely 100% for business, most of the time I'm going to recommend mileage. Okay. I mentioned I would talk about depreciation. Depreciation is a non-cash expense. Really, it just, if you buy an asset, for example, let's say a piece of equipment, that's a large ticket item, right? So you want to recognize the cost of that equipment over the time that you use it to generate revenue, right? So if the equipment has a useful life of about 5 years, you can generate revenue from this equipment for 5 years. You want to recognize that expense over 5 years. So say you buy the equipment for $10,000. You put it on your balance sheet for $10,000, you recognize depreciation for $2,000 a year for 5 years, right? And that's an expense to you. Now, for tax purposes, we have what we call Section 179, which allows you to write off the equipment in full, just depreciate it in full in 1 year. So it really depends on the type of asset that you can do that. But for the most part, the tax depreciation is much more favorable than the book depreciation. And of course, advertising, I just kind of threw that out there, but those are some of the expenses that you would incur, right? You advertise so you can grow your business. One thing about expenses, there are expenditures that are ordinary and necessary to your business. So whenever you have an expense, ask yourself, is this ordinary for my business? And is this necessary? If you can't answer yes to those questions, it's probably not deductible. So let's look at a sample income statement. So that same company that I had the balance sheet for, this is their income statement. So you'll see all their income here, all their revenue. Total revenue is about $170,000 for the year. Then you see cost of goods sold. So your cost of goods sold is subtracted from your revenue, gets you your gross profit. And then you have your other expenses. So here's your automobile expenses, right? Once again, we see this, but for tax purposes, I would tell you to take the mileage deduction more than likely. Depreciation expense, we just talked about, bank service charges, insurance. You see all these different expenses. These are expenses ordinary and necessary to the business. One of the most necessary expenses is right here, accounting. I'm biased, right? But definitely necessary. Okay. And I'll talk a little bit more about that later. Let's keep going. Let's see. So we have small tools and machinery, utilities, so on and so on. So all your expenses, your total expense is 72,630. Subtract that from your gross profit. You get ordinary income of about 25,000. You have some other interest income. Your net income is 25,500 or so. So that number is your most important number for tax purposes, right? I mean, think about it. Like, I know some of you, I get questions from clients sometimes like, hey, you know, I made X amount of dollars. So in this example, I made 25,500 on my business. I only took out of the business about $10,000. So will I be taxed on the 10,000 or will I be taxed on the 25,500? What do you guys think?
Waiting for some responses on the 25, 10K, both depending on how you set up business.
Okay.
Most
Well,
people are saying 25. Some people said all.
Okay. Well, the answer is the 25, right? You're going to be taxed on your net income. So it really doesn't matter how much you distribute to yourself. You're going to be taxed on the net income. Okay. So that's why the income statement is super important, right? This is the number that's going to go on your tax return. And this is the number that you will pay taxes on. All right. Another thing I wanted to bring up before we move on is if you look here, you don't see any payroll, right? Except for, I think there's some contractor expenses, right? Subcontractors right here. So there's no payroll. So what this tells me is this is probably a one person, you know, it's owned by one person, right? It's probably an LLC. So they don't do payroll for themselves. They just distribute the money, right? So that gives you an idea that distributions to yourself is not a deductible expense. You don't see it up here, right? It's not a deductible expense. It actually affects your equity, which is on your balance sheet. Okay. And you see here we have subcontractors. So that's how he's getting the labor help that he needs or he or she needs, right? They're using subcontractors. Please make sure you properly classify your contractors and your employees. The IRS will be all over you about this. And how do you determine the difference? The difference is how much control do you have over that person and their job and what they do, right? Do you provide the tools for them to do their job? Do you set the hours for them to do their job? Do they come to your office to do their job? Most likely they're an employee, okay? Contractors are independent contractors. That word independent is important, right? They set their own hours. A lot of them use their own equipment. They do things on their own. Those are contractors. So make sure that you have that proper classification. All right, so let's move forward. Let's talk about the cash flow statement. Now, most of you probably thinking cash flow statement. This is the most important statement, right? Yes, it is. But really, I believe that income statement we just talked about is because that's where your taxes would be calculated on, right? But let's talk about the cash flow statement. It's really a reconciliation of your income to your cash balance. Okay.
Sterling.
Yes.
I'm sorry to interrupt. There's a question that we probably should answer before we move on.
Okay, no problem.
Back to the 25,000.
Mm-hmm.
The question is, what if there is a loss? So
you're asking if there's a loss, do you pay taxes? Is that the question?
Yes. Is that right, Peter? Rohit, Peter? Looks like yes, that's the question.
Right. So no, there are no taxes to pay on a loss. As a matter of fact, depending on your total income situation, losses are usually carried forward, right? So you could carry forward a loss either forward or back, right? And you can lower your income and thus lower your taxes in later years or even a previous year, right? So losses, no, you do not pay taxes on losses.
Thank you.
Mm-hmm. It's a good question. All right, let's get back to the cash flow statement. So what I was saying was it's a reconciliation of your income to your cash balance. Not all transactions are cash transactions. I mentioned depreciation is not a cash transaction. You're just simply depreciating an asset. The cash balance on the balance sheet should match the cash balance on your cash flow statement. there are three sections to it: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So what are those? Well, your operating activities, basically just think of your operations, right? So you see in this operating activities section, you have accounts receivable. What this is doing is noting the change in your accounts receivable from the beginning of the year to the end of the year. And it does that for many of your balance sheet accounts in order to get your net cash provided by operating activities. So it kind of tells you, here's how much cash you've generated or spent on your operating activities. Then the second section is investing activities. This is what you invested in. So when you buy equipment and you buy big ticket items and fixed assets, those are your investments in the business, right? That's your investing activities. How much are you spending? So it looks like this company didn't have any major expenditures in the investing section, but of course the depreciation changed from year to year. So therefore you put it there. Financing activities. If you have loans from vehicles or any type of loan, note payables, or if you raise money by getting an investor, right? If you issue stock, if you're an S corp, things like that, that will go here. Okay. So this is really your cash statement. Now, what I want you to notice is takes your cash at the beginning of the period, it adds the net cash increase for the period, and then it gets you your ending cash, right? This ending cash balance should match your balance sheet. So in this example, let's go back and see if we can get it to match. Actually, let me bring this back up. So keep in mind the balance is $71,443.27. So if we go back to this balance sheet, our cash balance here is $53,191. However, remember those undeposited funds? That's still cash to you. Add those two together and you should get the balance, right? And I already forgot the number. It was 72,000, something like that. But you add those two together, that matches what's on your cash flow statement. So that's how you know your cash flow statement is right. 71,443. So, all right. So let's move forward. See. So we'll talk a little bit about taxes. All right. So once again, I mentioned that income statement, right? The income statement is super important as far as your taxes. That's what you're going to be taxed on, right? Once again, financial statements are foundational to determining your tax liability. What are you actually taxed on? So we answered that earlier, right? We're taxed on the net income. We're not taxed on the distributions you receive from the business. What is really deductible? Well, let's think about that. Let's talk about that a little bit more. We talked about meals and entertainment, right? Meals and entertainment, 50% meals are deductible, no entertainment, right? I had a client one time actually argue with me. This was crazy to even think, but he argued with me about this. He said, well, why is my income so high? I spent a ton of money paying off this loan that I took, right? Where is that in my income statement? Do you think paying off a loan is deductible? I see Bill shaking his head no. What says you?
They're saying no, Sterling.
Okay, is there any part of that loan payment that's deductible? And if so, what?
Someone said interest.
Interest, that's it. Interest is deductible. So the way I try to explain it to him, I said, well, think about this. When you receive the loan, what did you use the loan proceeds for? He said, oh, I use it to pay, certain expenses. Okay, then you write off those expenses? Yes. Okay, then. So you got your deduction, right? And then on top of that, you're going to get a deduction for the interest you pay, right? Believe it or not, he still didn't agree with me. So, it was one of those things where you just kind of throw your hands up and say, okay, well, these are the rules. So this is what we're going to do. Okay. And that's all there is to it. Some other things I mentioned, the distributions are not deductible.
Sterling.
Yes.
I'm sorry to interrupt. So someone made a comment on the interest piece, like a mortgage example. It's a statement, kind of a statement question. And then the next person asked, does the same apply to business credit cards?
Yes. So business credit cards, same thing, right? Whenever you use your credit card, you increase your liability, right? Because you owe that money, right? And whatever you use that credit card to buy is deductible, right? So if you use that credit card to, I don't know, say pay for some small tools, right? You can write off the small tools as an expense, but the actual credit card liability that you owe is not a deductible expense. All right, it's a liability. Now the interest on the credit card is deductible.
Okay. And thank you. That was very clear. And then the next one is, are home-based businesses able to deduct up to 25%?
Of what?
I'm assuming, interpreting, Amanda, that you mean for working out of your home, i.e. the office space?
Yes. So the office space deduction is really based on your square footage, right? So you can do it one of two ways. You can deduct $5 per square foot up to 1,500 square feet. Okay. Or you can try to take actual expenses, but the actual expenses is a complicated formula in a sense, because basically I'll try to explain it. It's, say your home office is 100 square feet. Your total home is 1,000 square feet, right? So that means your home office is 10% of your home, right? So that means you can write off 10% of your home expenses. A lot of times the $5 per square foot will get you a bigger deduction, and it's simpler, but you can do either or. Now on the flip side, with the actual expenses, depreciation can be included. So that's another advantage of using actual expenses. However, if you use depreciation on your home office, when you sell that home, you will have to recognize that depreciation as income. Is everybody familiar with the home gain exclusion? When you sell your primary home, you get a gain exclusion of up to $250,000 if you're single and up to $500,000 if you're married, filing joint. So basically, you sell your home, unless you sell a mansion, you're not going to pay taxes on the gain on that home, right? However, if you depreciate that home office, you will have to pay taxes on the depreciation when you sell it. So a lot of times it's better just to take $5 per square foot. Does that help?
Amanda said yes.
Okay. All right. So last point here I have, plan taxes in advance. What do I mean by that? So you can actually plan your taxes before they happen. How do you do that? Well, you have an idea of what you expect to make in income, right? If you have an idea of what you expect to make in income, I suggest hiring an expert, talking to your expert and saying, hey, here's how much income I expect to make. And not only just your business income, if you're married and your spouse makes income, or if you have other income outside of your business, you need to tell them your total household income. Here's how much I expect to make. The expert should be able to look at it and say, okay, based on current tax rules and things like that, here's what your potential tax liability could be. And then once you get that estimate, you can pay your estimated taxes in advance. By paying your estimated taxes in advance, you lower your chances of getting penalized for underpayment of taxes. You do understand that we're required to pay taxes in advance. When you're an employee, you get the taxes taken out of your check, right? When you're self-employed, you're still responsible for paying those taxes in advance. So get with an expert, make sure they can help you plan your taxes in advance. And also, the good thing about planning is that the expert can tell you ways you can save on your taxes. Say, hey, if you, I don't know, you have the cash flow, why don't you invest in this and it'll lower your taxes about X amount of dollars, right? Give charitably, it can lower your taxes X amount of dollars. Like, those are the type of things that a real expert can help you with. I'll tell you guys a quick story, what really helped my business take off and why it's important to hire an expert. What helped my business take off, I was in a networking group. I was actually in Georgia with the Gwinnett Chamber of Commerce. And I met a guy there. He said, Sterling, this guy that was working with me, he was doing my payroll taxes. I don't think he knew what he was doing. And I'm getting these letters from the IRS saying I owe them $10,000 of payroll tax. Can you help me? Yeah, sure. Let me get a power of attorney. I can speak with the IRS on your behalf, and let's see what's going on. Call the IRS. Turns out the guy had actually double paid the payroll taxes. He paid them for the wrong period. And so the IRS just had the money sitting in his bucket, just sitting there. And I said, okay, well, why don't we take that and use that to pay the taxes that he owes in this year and then refund him the difference? He got a check in the mail for about $17,000. So, of course, next Gwinnett Chamber of Commerce meeting, he gets up and tells everybody, Sterling got me a check for $17,000. So after the meeting, everybody's coming up. Hey, can I get your card? But that's what an expert can do. It didn't sound like much, but the fact that the expert was able to navigate the situation and talk to the IRS on their behalf, got him a nice refund check, right? And he was my client until I sold the business, right? Loyal client. So a couple other things, make sure you claim all income. There's nothing the IRS hates more than underreporting of income. Okay, if you get a 1099, report the 1099. If you don't, you will get a letter in the mail from the IRS. You underreported income. You owe us X amount of taxes plus penalties and interest. But on the flip side, make sure you also record all your deductions. Take advantage of all your deductions. That's where an expert can help you. Okay. All right. Last slide here. So there's some other statements you can look at. If you ever need financial statements for the bank to get a loan, the bank may ask for notes to the financial statements. These notes are just explanations of items on your statements, right? Why are your receivables so high, right? You just give an explanation, whatever. But these are just notes that can help the reader understand your financial statements. A statement of retained earnings. I mentioned earlier, retained earnings is in your equity. It's basically your beginning retained earnings plus net income minus any dividends you pay out. That's your retained earnings. Okay. Supplemental schedules, accounts receivable aging, accounts payable aging. These basically tell you how old your receivables and payables are. So if for a receivable, somebody owes you money for, and they haven't paid it yet, you invoiced them 60 days ago, right? This receivable aging will tell you how old that receivable is. So when you see a receivable become 60, 90, 120 years old or 20 days old, you probably want to reach out to the person. Hey, I need to get paid, right? Same thing with accounts payable. You owe somebody some money, it tells you how old that invoice is. You usually want to pay these things within 30 days. So if you look at this aging and you see it's greater than 30 days, you might want to go ahead and pay it, right? Some subledgers, accounts receivable subledger just basically shows you who owes you, right? So the accounts receivable balance tells you the total. The subledger tells you who owes that total, right? Accounts payable tells you who you owe, right? Inventory, if you have inventory, it tells you which items are listed in your inventory. Fixed assets, you have equipment, vehicles, it just gives you a detailed list of it. All right. And that is my presentation. Any questions? I'm sure there are questions. I see the chat light up.
I don't see any questions.
Okay, well, I guess I did a good job of explaining it.
Oh, 1 second. There's a question about slides.
Okay, I can bring my screen back up here.
I'll let Patty.
Dr. Angie, we're going to issue a video. So someone asked for a copy of the slides. So we will actually let you know when the video is available. So that's how we'll handle that. We'll tell you where it is.
Okay, so the question is, Sterling, do you happen to have any samples of P&Ls?
Yeah, so the slide that I showed you, here, I'll bring it back up here. So the slide that I showed you, oh goodness, let me find it.
Do have some raised hands. I'm sorry, let me come to those.
So this is a P&L. Your income statement is the same as your P&L, right? Profit and loss, income statement, same thing.
Wait a minute, let's see. So couple of comments, Sterling. Thanks. Thank you. This is very good. Thank you. And then here's a question. The IRS owes me a lot of money for last year's refund, but I still don't have it. I've checked the IRS site and the status of my refund is no longer available. Do you know what the delay is? I'm hearing this from my peers as well.
So a couple of reasons your refund can be delayed. Sometimes the IRS is just delayed in issuing them. It usually doesn't last very long. So, I mean, if it's been a year or so, then there's definitely an issue there, and you probably should contact the IRS. The other thing you want to make sure of is that, and I'm not saying this is the case with you, but make sure that you don't have any back taxes that you owe, because they could be holding it for that as well. So definitely, I think you should have a call with the IRS and just see what's going on. I know the wait time is ridiculous. I think they open at 7 a.m. So try to call around 7 a.m. and see if you can get in touch with somebody. If you want to hire an expert, one of the good things about CPAs is that there is a CPA hotline for the IRS. And so CPAs, they can get through a little bit quicker. So it may be worth talking to someone to help you out.
Awesome. Thank you. So the next question is, when you are trying to sell your business, what are the main things they are looking for on your financial reports?
When you're trying to sell your business, the main thing they're going to look for is revenue. Your business usually sells for, it could be 1 times revenue, yearly revenue, by the way, 1.5 times revenue on the high side, right? And so that's what they're looking for. They're looking to verify revenue. So a lot of the questions you're going to receive is this sustainable, right? Or are these one-time items that happen? Because once they buy your business, they want to make sure that they can generate similar or more revenue as you did. So that's the main thing they're going to look at.
Okay, and I also want to mention that in the next session, we will have someone talking about getting your business ready to sell. And so she'll address some of those things as well, how to make your business look more attractive or how they value your business. So we'll have a little bit more of that next week.
Awesome, Patty. Thank you. Are you currently offering accounting services, Mr. Porter?
No, I'm not at the moment. Like I said, I did sell my business last year, so I'm currently a professor at Shaw, but it doesn't mean I won't in the future. So feel free to contact me. If I can't help you, I know someone who will.
And we actually have someone on the team tonight
yes.
who's going to be speaking about services as well. The last question, and Patty, I think we should probably move on. Question is, where can you find startup funding?
That's a great question. So this part I'm not really an expert in, but startup funding, really, if you can find an investor, somebody that believes in your vision, that's one way. You can go to the bank to see if they have startup loans. I know the bank they're really strict about certain industries. So, certain industries, they'll be more willing to give startup loans, others not. So yeah, I mean, I think the most, I guess, often way that people find startup funds is finding an investor or just saving the money yourself. Some people take out personal loans or put a second mortgage on their home or do a refinancing of their home, right? Something like that. But outside of that, yeah, I mean, there's many different ways, but I think there are people like experts that can help you find funding as well.
Right. And I would like to say, for those of you that are looking for funding, grants, anything that you're looking for, the foundation for all of that is the business plan. Mm-hmm. A good, solid business plan with great projections, how you're going to do this, who you are. All of that is so relevant. So that's why we spend all this time on business plans. There's just no way around it. If someone is going to help you, you've got to show them on paper. And we've had some bankers here before, and they talk to you about that. You need also your financial documents, your 3 years of tax returns and all that. But that business plan has to be rock solid, and you need to be able to represent it in a rock solid way when you go for funding. Also at SCORE, we have counselors that can help you to look for funding, to get ready. I help many people to get their business plans together so that they can go for funding. You know, we take some of the stuff out that doesn't belong there because the bankers are going to look at certain things. Get yourself a SCORE counselor or a business counselor or a business consultant to help you with that. But that business plan, you just can't walk away from it if you're going to be a real business.
Love that. There are a couple of comments in here, a lot of thank yous. Let's move on from funding since Patty made the point. I did drop Kiva.com in. It's alternative funding, might be a great way to get some startup cash or capital. How to go about getting a SCORE counselor or mentor, you would go to raleigh-score.org. And at the top, you would look for Find a Mentor. You can scroll down and look for matches for what you are looking for. For example, if you are looking for someone in the marketing arena or financials or what have you, you can read backgrounds and then just request the mentor and we will work with you.
Excellent. Okay, Bill is going to give us a few practical examples of some things that he's seen as a business counselor. So Bill, why don't you share with us?
Very good. Thank you, Patty. Sterling, I think you did an excellent job. Thanks so much, because that what I want to focus my comments on are comments that will prompt and encourage you all as business owners to actually use financial statements as a way of managing your business. So where I want to start, last week I made a statement that that money is the language of business. And if that's the case, then you have to have tools to help manage and understand money. The other principle I will share with you is that being successful with a business is a lot about getting the best utilization of the resources you have in your business. And most of those resources will actually be money. So it's back to finance. You know, a lot of small business owners that I've worked with, at the end of the day, what they do is what we frequently call checkbook accounting. They use their checkbook. They can tell you how much money, how much revenue they brought in this month, and they can tell you how many expenses they had. But being effective with a business is not just knowing how much resource you had and how much you spent. It's really about how effectively you allocated that resource through your business. So not how much did you spend, but where did you spend it? And where do you need to spend it to produce the biggest impact? You know, and because most businesses are replicas of other businesses, there are loads of formulas, systems, etc., that we can use. For example, businesses on average, businesses that do $5 million or less a year, spend 7% of their revenues on marketing and promotion. If they're in a very competitive industry or they're trying to grow substantially, they spend more, as much as up to 25%. One of the things that an income statement allows you to do is look and see how much am I spending on marketing? Because if you're not spending enough, it doesn't matter what it is you're doing with the too little that you're spending. Okay, I mean, because that's proven in business. So your financial statements are literally like a GPS for your business. You wouldn't get in a car and try to drive it without a steering wheel. You know, now, yes, you could push on the accelerator to make it go forward. You could push on the brakes to stop it. You can shift the gears to change the direction. But without the steering wheel, you're probably not going to get that car to go where you want it to go very effectively. And so that's kind of the difference in what I'm going to call checkbook accounting. How much revenue did I bring in? How much expense did I have? And actually using financial statements that help you understand your business. And oftentimes you will find that it's not that you don't have enough revenue to do what you're trying to accomplish. It may be that you're not using that revenue in the most effective way. And those statements help you know that. There will be times you may think you need to borrow money, but if you looked at your balance sheet, you may find that you have assets that either would help you in the process of borrowing money, or you could see you have assets that you might be able to convert into cash so that you would have money to do what you'd want to do in your business. So many small business owners attempt to do their business without financial statements. Almost inevitably, at some point, if they have any success in their business, they realize that they need them. Then the other thing I would say that I want to reinforce from last week, accounting is a very technical process. There are lots of software packages that make it look easy. The biggest example of that is QuickBooks. You can work in QuickBooks for years and you never know you made a mistake because of the way that QuickBooks works. So what I would encourage you is you want great financial statements. So have a professional, a bookkeeper or an accountant, do your bookkeeping and accounting. Then when you get your financial statements, you know they're correct, you know they're usable. If you don't take that advice and you're insistent in doing your own accounting, at least have an accountant or a bookkeeper set your QuickBooks up for you initially, so they're at least set up correctly. It's called creating your chart of accounts. But I encourage you to resist the temptation of thinking you can bootstrap your accounting with any probability of doing it well. And frankly, most places in our business, we make a mistake, we can see it's a mistake. The challenge in accounting with the kind of software packages that are out there that are designed, frankly, to make it easy for us. Part of their making it easy is they do something with your mistake. It isn't necessarily the best thing to do, but you won't even know you're making a mistake. You know, I did my own bookkeeping for a long time, and I got a bookkeeper in, and I thought that the poor woman was going to pass out when she got in my books. And I thought I was doing a good job because I knew a little something about accounting, but you want to at least have an expert set your books up. It's worth every penny you pay. And at the end of the day, as Sterling said, you know, a lot of what business is about ends up in taxes. And you don't want to have a tax problem in your business. Thank you for shaking your head, Tabitha. You do not want a tax problem in your business. And good accounting gives you the best chance of not having a tax problem in your business. So I hope that those comments prompt you to take advantage of what Sterling has shared and what Tabitha is going to share, because having information doesn't help you if you don't utilize the information you have. Okay.
So Bill, there's at least one question, maybe a statement. How can you vet a good accountant / CPA to make sure you have someone that is competent and knowledgeable to be able to advise you? There are so many out there.
Yeah, call 5 people that you know that have a business and use an accountant and ask them who they use. You know, one of the reasons we don't make good choices is we try to make them in a void. You know, reach out to 5 business owners you know. And if you're in business and don't know 5 business owners, your priority ought to be getting to know some business owners. I mean, that ought to be a red flag to you. If you're getting ready to start a business or you're in business and you don't know some business owners, some of which need to be successful, then that ought to be a priority for you, because they will tell you accurate stuff. They won't give you conceptual answers. Like, you want to know what it's like to have a tax problem in a business? Ask me, I've had them. You know, I won't give you the conceptual answer. I'll tell you what actually keeps you awake at night. So go to people that are in business and ask them those questions.
Awesome. Thank you for the gems and statements that you're sharing in the chat about your own experiences. And I want to share this one. I know you can read. However, my good friend, Dr. Adrian Allen, who is a business professor at Shaw University and was one of our presenters before, makes a powerful statement about utilizing the help from your accountant year round and not just during tax season, and specifically encouraging us to know that they can help offset tax burdens versus only when taxes are due. And when I do the practical applications after Tabitha, I will share some practical applications and some fail cakes that I experienced in prior businesses as well. So with that said, yes, Bill always drops gems. So thank you for sharing and acknowledging that. Patty, we're ready to move on when you are.
We are ready to move on, Tabitha, so you can go ahead and start. Thank you.
How y'all doing tonight? I am so excited to be here to talk about taxes tonight. My name again is Tabitha. I am a mother, leader, entrepreneur, and a student always. Our specialty areas are in business taxes, bookkeeping, and cash flow solutions. We are the member of the National Society of Leadership, and we also have Master in Education in Business Administration, Project Management, and Psychology. Today, we'll be discussing the strategies for tracking business expenses for tax purposes and profitability. Mr. Sterling has definitely went into depth with talking about the income statement, also known as AKA P&L statements. So we'll be discussing that a little bit tonight, and also about the different style entities that your businesses are in for tax purposes. Some of the highlights tonight, we will be talking about the top common business entities and tax forms that you will utilize for those businesses. We'll also be discussing the business tax benefits, which we have already discussed, but we'll just talk about a little bit more on the expense side. And then also we will talk about the success and business expense tracking. Quick note, this is just information for we're presenting today from THL Ultimate Solutions. It's only for educational purposes. We are not attorneys, and if you have any legal questions, please consult with your attorney. All right, so we're going to talk about the top common business entities. The first common entity that most people go into business with is a sole proprietorship, which is done on your 1040, which is your personal tax return, and it will be on a Schedule C. Some of the pros of having this style business is it's easy and inexpensive to start. You can control it more. And then also you'll have the ability to test the waters before actually expanding into that business. So if you are unsure of if this business will make money, even though you made good projections on your business plan, sometimes you might want to test the business first. And this is a great way to test it and then convert it later to a corporation style or LLC. Some of the cons to having this style business is you're 100% personal liability for it, and it is hard to raise capital to grow it. The next most common business entity is a limited liability company. This is still done. Well, actually, it can be done on 3 different forms. Depending on how this limited liability company is set up, it can be done on your personal 1040 on a Schedule C, or it can be done on 1120S if you select to select this company, or it can be done on a 1065, which is a partnership return. And that's usually when 2 or more members come together and start a business as an LLC. So that would be performed on a 1065. A lot of common mistakes that I see come in is with some partnerships, they're 1099 in their self and they're putting it on their 1040s when it should be a 1065, because if you think about it, you're giving yourself double income when you 1099 yourself right back to the same form that we're going to already use as the 1040 Schedule C. So you're kind of doubling yourself there. So when you put it on a 1065 in a partnership way, you're just sharing on the profits, and you're going to receive a K1 to go on your 1040. So it still goes back to the 1040. It's just, it gives you a lower tax liability doing it the correct way. The pros to having an LLC is you'll have the ability to be able to grow that business more professionally. Some of the cons to it is a higher maintenance fee to have an LLC versus having a sole proprietorship. And it's also additional taxes in some states. Now, if you are a 1120S select as an LLC, you do incur a $200 North Carolina franchise fee on the other side. Plus, you have the $200 maintenance fee to the state as well. So that's it's going to almost the same department, but it's $400 to maintain that LLC as an S select versus if it was just a S corporation style. So I just want to keep that there if you do decide to S select that LLC. The next most common entity, as we just discussed, is a 1065. And I said on the tax terms first, but it is a partnership entity, which is done on a 1065. The pros to having a partnership is you'll be able, again, like we just discussed, share the profits as a K1 on your 1040, and you'll probably have more business opportunities because you have more than one owner working at the same time. Some of the cons could be potential conflict, future selling complications, maybe liability issues, things of that nature when you're running a partnership because you have 2 different people running. And usually in your operations agreement and in your business plan, that should be very clear so you won't run into those type of issues with your partnership. The next most common business entity is an S Corp. As we discussed before, a LLC can be elected as a 1120S, and S Corps are done on 1120S. The pros is you have good privacy protection with a S corporation. You'll be able to protect your assets a little bit better in an S corporation. But some of the cons to it is your maximum of only 100 shareholders as a S corp. That's some of the cons to having an S corp. Your next most common business entity is a C corporation. Okay, they're done on 1120s as your tax form. The pros to having a corporation is liability protection, long life existence. But some of the cons is double taxation. It's very high to maintain a corporation as well, and it's increased paperwork. And your last most common is other styles out there, but the last most common is nonprofits. These are done on forms 990. The pros is you'll have more grant access, but you also can have grant access as a regular business too. And some of the cons is low pay, funding competition, lack of funds. All right, so let's discuss business tax benefits, and we have discussed that with Mr. Sterling, but we're just going to go over it just a little bit more. These are some of the things you see. Now, if you have a business, this is the actual real Schedule C up here on the screen, and this is what your tax professional is looking at when we're asking you certain questions. So as we're looking at business expenses, I'm going to highlight a few of them that are more common with businesses, but this is only done for a LLC that is not as selected or as a DBA style business, which is a sole proprietorship business. With this tax form, which is your actual Schedule C, you'll see things up there such as advertisement, meals, as Mr. Sterling discussed, travel, office expenses. So this is what your tax professional is looking at. So when we are asking for your P&Ls or your income statement, this is where we're transferring that information to. So I just wanted to show that form so you can see what your tax professional is actually working with when they're trying to make sure you're getting all the deductions you deserve as a business owner. Other tax benefits include your cell phone. A lot of people leave out the cell phone. You have to make business connections. So please put that cell phone up there. Now, the cell phone is not 100% deductible, but it is a great percentage on it to be able to deduct most of that phone bill that you're utilizing for business. You also have the business phone line. This is more of a landline phone. So, and things like that, or a virtual phone, things like that. Education and training. If you're getting education and training to be able to perform in your business, that is a business write-off. Client incentives and things like that. So those things are not like listed on your tax forms, but it's a section called other. And this is where we can detail that information at. All right. So now we're going to talk about success and business expense tracking. There are two key financial reports, which Mr. Sterling has discussed today. The income statement, AKA known as the profit and loss statement, and your cash flow statement. With these two, especially in the beginning, you just starting your business. You want to know about all your financial statements from your expert that you're working with, but these are the two most common ones that the tax professional, not really the cash flow one, but the cash flow one is for you to see if your businesses have good health. That cash flow will determine if your business is in good health as well. But with the profit and loss report, that's what your tax professional needs. Your tax professional is looking at your profits and loss report to look at the income coming in, and they're also looking at what needs to be taxed, which is that bottom line number. Also, they're looking at the expenses that you have occurred over the annual period. So if you have they want to see the amounts of your meals and the amounts of your mileage wouldn't be up there, but maybe expenses that you utilize with your vehicle or travel, contractor pay, all of that. It's on your P&Ls. Here is an example of a P&L. We're not going to go into depth with it, but it's an income statement as well, but it's also a profit and loss statement for both of them. And of course, Mr. Sterling has went over this. So I'm not going to go in details with this because he did a very awesome job explaining this to us already. And then of course, this is your cash flow. I always just show the cash flow because this really when you're starting a business, you really want to see that cash flow, make sure it's staying healthy and in your business, making sure things, I always look at it as it's going in and going out, making sure something is floating through, because if nothing is floating through your business, it will not survive well. I always recommend check your financial reports monthly, quarterly, and annually. Compare them to the prior years, compare them to the prior quarters, compare them to the prior month. This will determine being able to help you make better business decisions. It was a time in my life when I wasn't keeping up with my prior businesses that I've done. And this is where my passion comes from, is because with this report, it made me consciously aware of where I was spending my money. So checking in on your business is very, very important. And I just want to leave this free tool right here. I know I utilize QuickBooks for my clients, and I also utilize this software as well. This software right here is actually free, and you'll be able to go in and categorize your items and expenses and things like that. And you'll be able to write invoices, even do payroll in here for 100% free, except for the payroll side. And that is called waveapps.com. This is the mobile version of it, where if you're on the go and you need to log an invoice and things like that, that software helps with that as well. It's just a free version if you want to start there, but they also have other versions out there. I do recommend QuickBooks as well. And at this time, Miss Dr. Angie will be joining me. And this is my contact information if you have any further questions about taxation.
Great job, Tabitha. Thank you.
Thank
There
you.
is at least one question, and we are opening the floor up for more questions to Tabitha before I share practical applications. So the one question that's in the Q&A says, I have an LLC and my tax person told me I could not deduct my continuing education expenses as I made drawings instead of salary. That's a statement, but I think you might be asking, is that right? Or
no, you can write your you can write your education and training off. That's a 100% write off. It's just like advertisement. You can write that as 100% too. You have to be educated in what you do. You can't go out there and do construction work without getting construction training. So you can write that type of stuff off. So yeah.
I think the distinction that Marianne is making, I know Marianne from many of our other sessions, the fact that she was taking a drawdown versus a salary is the distinction that she wants.
Oh, well, she was on a salary occurring education and training expenses. Is that what she's saying?
She's saying that she took a drawdown, so she did not take a salary, and that's why she was told she could not deduct the continuing ed. Do you want the CPA to step in here?
Yes.
Yeah, you can, but to me, if you're running a business, if you're accruing a 1099, that is a 100% write-off. Now, if you're on a salary basis collecting a wage, you cannot write that off. Sterling, you want to back me up here?
Well, what I was going to say, it really doesn't have anything to do with continuing education. So, I mean, yeah. I don't really see what the correlation is there, or why they would say that. But yeah, it's definitely, continuing education is definitely 100% deductible.
Yes.
So Arthur Brooks is asking, what is a drawdown exactly? Is it an owner withdrawal?
Yes. Yeah, I mean, that's pretty much what it is. So you're just drawing money out of your business. So you can either draw money out of your business or you can pay yourself a salary, really depending on what type of business you have, as Ms. Tabitha referred to. Most LLCs would just do a owner's draw, like single member LLC. But like S Corps, you probably would do payroll.
Yeah.
A good idea, I think, relative to that is to talk with your bookkeeper, accountant, or CPA. Let them know that over the operating period, you're going to be taking money out of the business, and ask them how are they going to apply it to your books, so that you don't have them trying to fix something after the fact. I mean, owners always regularly, frequently take money out of the business. The question is how to do it, and having whoever's doing your books know what you're doing so they can handle it the right way for your benefit.
Thank you, Bill. Another Jim. Next question. What are the benefits of creating a trust for one's business? Would you recommend it? And I'll open this up to anyone of our panelists.
Okay, I would like to address that. Next week, we are going to talk about trust. That will be part of next week's presentation. So if you can come back next week or get the video later on, that's when we will address that.
Awesome. Thank you, Patty. What steps should I take to dissolve a relationship with my current tax person? I'm not getting the full understanding of services being rendered.
Well, for one, if you have a relationship with a tax person, that tax person should walk you from step one all the way through and teach you and educate you throughout the whole process. To dissolve that, you're not obligated to be with anyone. That's your choice. So in my recommendations, always find someone who's going to educate you back to the point you can actually do your own taxes, but you're just coming to that tax professional because you know they're going to sign and make sure it's done correctly. So you're going for convenience. because taxes, anybody can do their own taxes. You come to a professional for convenience, and you come to a professional for education throughout the process. So if you're not receiving that from your tax preparer or tax professional, then you should move on.
What she said. What are the signs that predict an audit? Great question. So in other words, when do I know I need an audit?
Well, it depends on what type of audit. If it's taxation audit, it's certain things I do not recommend to do on your taxes. And that's where that professional comes in to kind of slow you down, because certain things can get you automatically audited. Like, for example, if you put down subcontractor pay and you did not 1099 those contractors, that's an automatic audit, because IRS do not see those 1099s on the other end. So it's certain things a professional can tell you not to put if you cannot prove the other end. You have to have proof for everything you put on your on your taxes.
Awesome. Everyone else is saying thank you. So is that a question? Marion, I think we answered your question and you're making a statement. If not, please follow up with me and I will try to get you to someone that might be able to help you further. Really, a bookkeeper or accountant is what you need. So my role here tonight is to share practical applications on the importance of the pieces Tabitha talked about as it relates to your financials. What I would say to you is, so this is my 13th business. So clearly I'm still feeling my way forward. I'm still learning. We're all on this lifelong journey of learning and being better, right? And so when I think about business, my first words of wisdom to you, and I'm saying this with all my heart, you need a professional financial advisor, bookkeeper, accountant, CPA, and tax professional. And if you can find them all in one, then you have struck gold, like the Beverly Hillbillies, right? And I found a lot of that in one person. So the reason I say that is so important is because we must know our numbers. So when we think about being minority, business owners, people of color, women, or just business owners in general, we come to our business ownership with a skill, with a passion, with some knowledge, experience, and we want to do this thing. For me, it's consulting, and it's been in many areas. And in the current world, it's management consulting with a focus on training, coaching, and organizational development consulting. That's a lot of work. And I want to focus on servicing my clients and growing my business. At the same time, as a smart business owner, I need to know my numbers. I need to know what is on my profit and loss statement. I need to know my cash flow. I need to know my high and low seasons. I need to know the best tax advantages to write off in my business, and all of these things that all three of our very insightful speakers shared with us tonight. And I think some of you have heard this story, and I might have touched on it a little bit last week. So in one of my businesses, I grew this business to multi-millions in federal government contracting primarily. And I knew my numbers. I didn't fully understand going in depth into reading my financial statements and really being able to look at red flags. So I glanced and I signed all the payables that we sent out. I had all these reports. I was more high level, glaze over, on the move. I looked up and my partner was stealing money out of the company and we didn't have any money. And what really helped me, Sterling, is I was invited to Dartmouth College to a executive business program. And it was very much like a capstone program. And there were other businesses there, and we worked in small groups. And we had to bring financials and other documentation to these meetings in order to grow. And so in this study group, they put different backgrounds together. So one of the guys was very strong in finance. We were all business owners. He took one look at my financials bill and he said, "Oh, you got a problem." And so we dug into it lightly. And when I got back to my home office, we had befriended each other. He called me up and he explained to me in depth what my problem was and highly urged me to bring in an auditor and to fire somebody in my team. And so the short story is it was my business partner. I placed him on an administrative leave, initially with pay. I brought in an outsider to do a short audit, which is a quick audit to try to figure out where the problem was. We didn't have any money because this guy was embezzling money from the company. And guess what, Bill? I was signing checks, bogus checks, paying to these bogus companies that he was running through the company. So essentially we had no money. So I had to reduce my salary and all of the executive salaries and just really go lean and mean. And because of the lawsuit and all that was happening, I was pending 3.5 million in revenue of new contracts coming in that I had to withdraw from because you cannot accept government contracts if you have any litigation going on. And so my point is, and the pain around that is I want you guys to learn from me. Know your numbers. The reason that Patty Williams and Bill Davis and the rest of this team and I are doing these sessions over and over is because Black folks, we got to be financially literate. And this is one of the reasons why. So we say we want to leave a legacy to our children and our grandchildren, but we don't know our numbers. We don't know our money. We don't know our financials. And I'm not gonna lie. I used to throw all my receipts in a bag or a folder and just hand them off to someone because I was busy, right? Because I'm not the only one doing that. Some of y'all doing that too, right? And so what I would say to you is, you don't have to necessarily do anything else, but you better have a top-notch bookkeeper, accountant, CPA, and or tax preparer. And I'm not going to advise you financially, Tabitha. I loved your disclaimer. I am not an attorney, nor am I a tax preparer. I'm not a financial expert. I am an entrepreneur who is giving you some practical application. Know enough about your financials. Spend monthly time with your bookkeeper, walking through your financials. What is this? What do you mean when you say P&L? And it's not P&L as in N as in Nancy, it's P ampersand L, profit and loss. What does that look like? What does my cash flow look like? What is my burn rate? What is my overhead? How am I doing? What is the health of my company? Can I sustain this business financially beyond this 1 year? What is the cost of goods sold? Patty Williams will tell you, when you do that business plan, if you don't see a profit after 2 to 3 years, you don't have a fundable business and you need to scrap that business and start all over again. She taught me that. Patty's one of my mentors. She taught me that from day one. And I'm telling you, she is 100% right. So that was one piece I wanted to share with you with a lot of passion around that. So let me tell you how important it is to have a tax professional on your side. In 2018, I was let go of my good corporate job, and I received a very nice severance pay, and I decided to take my money and relaunch another business, number 13. And I had a financial planner, and I went to my financial planner and we spoke, and we brought my a CPA in, and the three of us sat down and said, okay, she has a lot that she wants to do with this little bit of money. She needs to live off of some of it. She needs to start a business with some of it. And she still needs to be thinking about retirement as well, because I'm well over the 50 club. And so having that support system, we were able to pre-plan around taxation because I wasn't 59 and a half yet. So we were smart enough to leave some of the money in the company's 401k versus moving it all over to an IRA with my current financial planner so that, she could invest aggressively in my stock plan. All of those things are important to think about. So I would add to what we're being told tonight, find a financial planner. You do not have to have hundreds of thousands of dollars. You need someone advising you, because when we know better, we can do better. And so having someone who understands money and how to invest it and how to utilize it to make it work for you. The other thing I will tell you is, when you're starting a business, you have to operate lean and mean. What's the saying? I think Patty or Bill might have said this. Low tech, as in overhead and expenditure, means high check. And what I would say about that at the same time is, this business has been up and running for 4 years now. I still have to be very strategic about how I spend my money, how I manage my money, the expenses that we create. We have a lot of printing costs in my business as a trainer. People want PowerPoints and handouts and things of that nature. If it's a full-on training session for branding purposes, part of my value proposition is we do name badges, tent cards, those kinds of things. So we have to think ahead and buy in bulk quantity and those kinds of things. So a lot goes into the finances of operating your business to make sure that you are maximizing the return on your investment and your profits. So these are all things that I want you to be thinking about in whatever your business is and learning. And you may not know out the gate because you're projecting on the front end, but what are the cost of my services or goods sold, and how can I streamline that so that I keep more of this money? And in those early days and hard times, you may have to pay yourself less or not pay yourself at all. So when you think about owner's draw, I did owner's draws for 2 years. And the reason I did that is because I didn't want to take money out when I couldn't afford it. I needed to operate the business. I needed people to help me. So I had to pay my employees as well as other consultants in order to scale my business and be able to take on more work. So these are all things that I want to tell you about. I also want to tell you that there are times you don't always need a CPA. You need a heck of a bookkeeper, and there are times when you need a CPA. And you need to know and have a good relationship with your bookkeeper such that they would say to you, you know what, we need a CPA, right? So that you can make sure you're protecting your business and all that you're working so hard for. So those are the practical applications that I have for you. And I would also lastly share, don't be afraid to try new things and use some of the apps that are out here. So I will say, and I am by no means suggesting you do this. However, Anne, I am proud to say that Tabitha Lewis is my bookkeeper. And when I met Tabitha, I really needed someone to help me get my books in order. As Bill said, I needed my chart of accounts set up properly. I needed to make sure I was optimizing my tax returns and that I was filing properly on an LLC, all of those things. And Tabitha not only did she help me get things in order, but I now have monthly reports and quarterly reports and things that I can pre-think about. I have an operating budget. I'm able to project more frequently. And she's always teaching me new technology. I use Wave with her. And when I'm traveling, I can log in and see, what my money is looking like and what do I need to do and can I afford to do this thing or not? And she's always introducing me to other apps as well. So whoever you end up utilizing as your bookkeeper, accountant, CPA, financial planner, advisor, it's all about relationship. It's also about vulnerability. You don't know anything at the end of the day. And I'm not insulting anyone. I'm just saying there is so much to learn about operating your business that you don't know a darn thing. So ask lots of questions, listen, and be vulnerable and willing to learn. With that, I will pause. I see some chat happening and some questions. I'm going to go to the questions first because that is the format that we're using. So this person says, so for counting the space for work, I live with someone else where they provide an office for my business. I pay them rent for that space, but this has become my permanent address. can I deduct the rent of that space? I need to rely on Tabitha or Sterling to address that.
So the answer there would be yes, you can, but just make sure that that space that you're using as your office is only used for your business. So if that space is only used for your business, you can write off the portion of that. So what's going to be tough is you have to be able to calculate the square footage of the space. You also have to be able to calculate the square footage of the home. And then you take that percentage, right? Or you can take $5 per square foot. So definitely get with an expert on that, because you share the home with someone else. There's definitely going to have to be some calculation involved. But as long as you use that space 100% for business, you should be able to get a write-off for it.
Thank you, Sterling. Looks like there's another question. Currently looking for banks that are more tailored to women and small business owners. Any suggestions? I'll start out with that, and then I would ask others to step in. I know Bill knows a lot of bankers in the area, and I'm sure Patty does too. So I happen to be building a relationship with a banker from North State Bank. I highly recommend knowing a banker. Many of us as minorities and people of color, particularly women, we don't have a banker. And in order to get loans and get those lines of credit and take advantage of all that your banker can do for you, again, relationship. So I do know that some of the smaller banks are definitely much more friendly to minority and women, small business owners. I've been banking with First Horizon. I started with them when they were Capital Bank, and they were pretty well known to be supportive of small businesses. As they've grown, I'm not as pleased with them as I once was. So I'm actually making some changes now. For me, it's all about being able to manage my money on my phone, my computer, or wherever I am. And I don't like their technology and customer service is not quite what's working for me. I would encourage you in some of your networking to go to places where bankers hang out. They have a lot of activities going on, or just walk in a bank. First Citizens Bank is one of the banks that I hear quite a lot about in terms of wanting to attract more women in business, small business owners as well. So I will pause for my experiences and see what others have to share on that one.
Yeah, I want to amplify what Angie said about smaller banks, local banks, regional banks. Angie's point about developing a relationship with a banker, that is much more doable with a small bank than it is with a large bank. And as a small business, I'd even go further to say that that relationship is going to be more critical than the convenience. I happen to do my business banking through a bank that, as best I know, has only one location in Raleigh. But I'm fortunate enough to have a great relationship with them. And when you need that relationship with your banker, you get real clear that all the rest is not as impactful or as important to you as that relationship. So I would encourage you for your business banking, seek out small banks, regional banks, not the big banks. That actually will, in my experience, will end up costing you more based on how they do their business and how they make their money. Small banks need the relationship to be successful. So that'd be my encouragement.
Thanks, Bill. And I think that addresses the question about someone getting moved from a bank without their consent. And I would say, with all due respect to the bank, when these mergers and acquisitions happen, they kind of have to go with it. Sometimes they don't get a lot of notice. So I'm not making excuses for them. If another bank has approached you, I would highly recommend to Bill and our points, it is a relationship, and the fact that they're taking the time to reach out to you says they want your business. So I would at least have a conversation with them. So in the banking relationship that I'm starting, we've had lunch twice, we've had coffee, we've had a couple of phone calls. I've shared my financial statements. I shared my year-end performance from last year. I would add that as a practical application. At the end of every year, I do a summary of our financial performance, and I share that with my employees, and I ask for feedback. I do a strategic planning session in the last quarter of the year, usually in November, late November, early December. We make it a holiday, a year-end holiday celebration, but we tie the financial performance into our KPIs, or key performance indicators, in terms of the goals that we had, looking at the number of customers we serviced, the feedback that we received from our customers, the service offerings, what can we expand into, what new things can we add to continue to show that value proposition for our business, et cetera. All of those things matter, and they make your money matter. Someone asked about a credit union. There are credit unions who do have business banking. I know Coastal Federal Credit Union is one of those banks. And I've been with them for a personal bank account for a very long time. And I'm actually meeting with someone in my Rocky Mount office to talk about banking. In fact, I'm doing a knowledge, an educational network, a marketing event with a group of bankers in the credit union industry. So that might be something you all want to look at. Someone says Coastal does it. They do have a business banking center in Raleigh for sure. I met someone through the Leadership Raleigh program who was very engaged in that process. I approached them and they said they didn't take on business accounts. I'm not sure who you spoke to, Kalila. I'm not sure if I'm pronouncing your name right, but they do. Oh, someone else is saying yes. So I don't see any other question. Oh, I do see a question back over here in the Q&A. Oh, that's the same question I didn't clear out. So any other questions?
I would like to add to the Coastal, like the credit unions, the only difference with their business bank accounts, they do require a couple extra documents, such as the operations agreement. So keep that in mind when you're going to the credit unions for business bank accounts.
Thanks, Tabitha. So I would like to ask you all a question. My question is, how many business bank accounts should you have, and what should those accounts be for? Some brave soul, help me out. Take a guess. 1 for each business. 3. Oh, someone wants me to repeat. How many business bank accounts should you have, and what should they be for? 2 savings, 3 operation. Thomas, you are the bomb.com. So yes, you should have an operating account. You should have a savings account. You should have an account where you're putting your tax monies into. You should have a rainy day account. And there's one more, Bill. What am I missing?
Income account.
Income account. Thank you. So yes, 5 bank accounts you should have. I'm on my 3rd one and working my way up to my 5. I didn't know that. I learned that through a SCORE workshop about 3 years ago. And ever since then, I've been working toward that. So, and you're right. If you're right, I didn't know that either. I think it's Elandi. So grant funding, yes. If you have a nonprofit, There may be other things that you want to manage around money. I don't know a lot about nonprofits. I do know that you have to be very careful when you're utilizing grant money. I know someone who got in a lot of trouble over mismanaging grant money. Again, you need an accountant, a CPA, and an auditor. So I would say to you, and Tabitha and I have talked about this, or when we do this. So I utilize Tabitha for my financial statements, my operating budget, and my tax returns. And then I audit her when I want or need to. And so you can do that as a way of, keeping lower costs, because of course a bookkeeper's rates are lower than a CPA, and use the CPA when you want to. And I do recommend that you audit your books at least once a year for an informal audit. It doesn't have to be a formal audit. As you grow, you want to have a formal audit. And Sterling, I don't know, how often are you recommending that we have formal audits in our business these days?
Well, once you're a big enough business, at least annually, you want to have an audit. But for most small businesses, audits aren't required. So you're really doing it just to make sure everything's in order. So, I would recommend annually.
Thank you. Any other questions? Let's see, looks like some questions here. Is an informal audit expensive? Not to me. No financial service is expensive to me, and it's all relative, right? So when I think about what I would pay for, I will pay a bookkeeper before I pay myself. I would pay to make sure that my finances are in order. In a way, if I had to take a choice, for me, is making sure that I can afford all the things that I need to keep my business operating. And that's only because of what happened to me in the past. So that's an important thing for me. How much should you save to start a new business? It depends on the business and how you want to start it. I have started businesses and capitalized them or funded them rather off of contracts. So I earn one contract, it's $10,000, let's say, and I need a computer and I need whatever. So I reinvest in that. And then the next contract is $20,000. You just keep doing that. So that's one way to start a business with no money. It depends. And it comes with, what did Patty tell you? You absolutely had to have a business plan. So that is the best way to do that. Someone else dropped those accounts in there for me while I'm talking. So thank you for that. And that business plan and having good financial projections are everything for your business. So Patty, I'll pause here and turn it back over to you. We've answered all of the questions in the Q&A and in the chat.
All right. Thank you all so much. This has been a wonderful discussion. And I'd like to thank Sterling and Tabitha for joining us. You all have really given us some good information, and we hope that you all will come back and be with us again in the future. As I had mentioned earlier, Darlene Thorne is not here tonight to talk about self-care in the growth phase. So we're going to try to share a little bit of that about how we grew or are growing our businesses and how we take care of ourselves. So Bill, will you share a little bit about when you were managing your business, how you stayed even and how you managed everything? If you'll start us off.
Yeah, well, I'll share some of the strategies I used to try to stay even. I don't know whether I really was successful or not, but there are a couple of things. And one of them came from my 28 years in corporate. And I had the culture was you had lunch hour and everybody left where they were working for an hour. And even when I started my own business, I would specifically take time at lunch, whether I ate or not, but I would remove myself from my office. I'd go for a walk, I'd go somewhere. On a daily basis. That was one thing. Another thing that I did is I did what I call calendar blocking. In other words, I would build my calendar and allocate time for what I was doing, be it work, etc. But I also would do it based on my flow of energy. So for me, I'm a morning person. So I did my workshops, training programs, group experiences in the morning because that takes a lot of energy. I would do my one-on-one client meetings in the afternoon. I had a lower energy, but I got energized by working with my clients. And so that way, my work matched my energy level, so to speak. And so I could do that on a very sustained basis. And part of the key is, how do you operate in a sustained way that you don't burn yourself out? The other thing I would do is I would determine what were my family priorities, and I would block the time for those, and those were sacred. You know, work wasn't going to bleed into those. Wasn't necessarily a whole lot of time, wasn't all the time, but there was that time. And then I would take time for just me. I mean, when I started thinking about how do I spend my time, I would think about what time do I want for me? Because time with the family isn't time for yourself. It's important. And then I did with the time for myself, whatever I chose to do. If that was play golf, do nothing, watch a movie. And for me, at that time, going to the movies was a big deal. I loved the movies. I would go to the movies. That'd give me 2 hours, you know, but the idea is block out your time for the way you want your life to go. In other words, design your life and live into your design. Don't try to earn the time to do the things you enjoy in life.
Thank you so much, Bill. That was some very good advice. In the beginning, when you're building your business, sometimes you put in extra time because you're trying to get everything going, but you have to know when to start to level that off, when to bring in extra help, when to kind of dial back, because you can so easily get burned out. The way that I handled it was I would get extra office staff. I had a home care agency, lots of clients in the field, lots of employees, and everybody wanted to talk to me. So at some point, I had to get other people to do some of the other things so that I could be on that phone and manage things. Because in that business, I'm a registered nurse. So you have the patients or the clients calling you. You have to talk to them about their health, their family members. Also, you have to have a really good relationship with your employees because they will go the extra mile for you. And so I had all these employees, and many of them were older than I was. So I kind of looked at them like aunts and cousins. And so I managed them sort of as employees, but I also had to have that relationship with them. And it was always a kind of intense when I spoke to them as to how I handled that. And many of them still call me now. They're like, let me tell you this. And we share things because that's how I had to do that in order to get them to go the extra mile in such a tough business. Now, the way that I took care of myself was I love to travel. I would travel, you know, whenever I could, abroad or in the US. And I love really, really good restaurants. So as Bill said, he went out for lunch every day. I would go to the best restaurants in town for lunch. It was cheaper at lunchtime and it was quiet and someone was serving me and I could just sit there and enjoy myself and I would be invigorated. So then I'd go back to the office and I'd go home and I may work a little more, but I'm a morning person too. When I get up, I can get a lot done first thing in the morning. And then I would have that wonderful lunch and go back to work. And then I would travel sometimes too, to really get away from it all. But it was still like I was running on a hamster wheel sometimes. So I had to really take care of myself. I exercised, I tried to eat right. And when I didn't, I could see that I didn't have the energy that I needed. So don't you all neglect to set up your meal plan. The way that I manage my meals is that I prepare large volumes of food and I freeze it in portions. So if I start working and I want to make sure I don't go to McDonald's, then I've already prepared baked chicken, Brussels sprouts, roasted potatoes, and I pull that portion out. All I've got to do is pop it into the microwave, and I still had a nutritious meal. I learned that technique because at one time I was running so hard, I had to get myself a personal trainer. And so she came and worked with me and she said, let's talk about your meals. She said, do you cook? I said, yes, I cook. She said, well, we're going to do great with this. And she gave me the technique of cooking the food that way. So I freeze things that some of you probably have never frozen. Last year, I went to the farmer's market and I bought a whole box of sweet potatoes. I love sweet potatoes. I baked every one of them and I froze them individually. They're in the freezer. So I just go and I bake them, peel them, wrap them up really well. And when I want a sweet potato, I take it out and I put it in the microwave and it does fine. I eat sweet potatoes for breakfast any time of the day. I love sweet potatoes and they're good for you. So just look at the way things that you can do for yourself. We have to manage our health, y'all. You cannot run a business when you do not eat right and you're sitting there having a drink all the way up until midnight because you're working. You're not being productive. You're not going to sleep well. Go to bed and sleep. Go to sleep at a certain time. Relax, get yourself some downtime and rest. I do that too. And I'm the type person, I can get a lot of work done, but I need a lot of downtime. I have to have time to settle myself and think things over. I have to do that every day or else I'm totally unproductive. So and I still do all of that now. My schedule is not as bad as it used to be. I manage it a lot more. I only take on clients that I know I can tolerate. You know, there's some clients I will not take them on because they don't fit my personality anymore. And so if I know that they can follow directions and they can work according to the way that I do things now in my life, then I will take them on. There are others I'm like, no, this is not a good fit. Maybe you should work with someone else. So you'll get to a point where you can do that as well. But if you have everything set up structurally, you'll know who works for you and who doesn't. Because this is your life. You're just one person and all these things are coming at you from all different directions. And you have to be the manager of all of that. Dr. Angie, would you like to share more about how you do things?
Absolutely. So on the work side, I'm a planner. So for example, I'm onboarding a new client. We officially start tomorrow. I've already had a strategy session with that client. It's a 3-month project. I've already put together a project management plan by the 3 months, outlining the scope of work. Bill, you're so proud of me. I can see it on your face. Thank you. And it's all there. And now, I've added my team. I have a subcontractor that's helping out with this project. It's an org development project. So we'll be doing a lot of assessments and focus groups. So it's all documented out. We might have to travel in person. It's probably going to be more virtual for costs, and I prefer it that way these days. However, planning, so that's the business side. Guess what? The personal side, it's the same thing. Once a week, I take a hot soak with some Epsom salt, lavender, candles, jazz, some Nancy Wilson, some Miles Davis, and light candles and just relax. Once a month, and I work a lot of weekends. I work a lot of Saturdays in my business. I work Sundays when I absolutely have to. It's usually because I had to push something over due to a family or some other critical obligation. I still do church at home primarily, thanks to where we are in today's world, right? But I make time for all those things. Keeping my spirit right is very important to me. resting. So 1 week in a month, I do nothing other than what I want to do. I get my hair done frequently. I get, mani-pedis frequently. I get a massage at least once a month. I drink a lot of this water, and I don't get enough sleep. I'm working on that. I know I need to get more sleep. Sometimes things are so hectic, I don't have time to get as much sleep as I would like. I've improved tremendously though. And I make time throughout the day to check in with myself, the whole mindful thing that Sharon was so impactful with last week, right? So taking time, sometimes it's just 5 minutes just to sit, do some inhale, exhales, close my eyes. And YouTube, y'all, is amazing for inspiration. I like Grace for Purpose. It's a prayer channel. I just Google on YouTube, rather, morning prayers, evening prayers. So when I'm getting ready for bed, I put an evening prayer on, and it has beautiful, picturesque backgrounds, and they may be quoting scripture or saying inspirational things that move me. I also built in AM, PM stretching. I do stretches for women over 50. And it's mini yoga to some degree, 10 minutes. Sometimes I only have 5 minutes, but you'll be amazed getting those knots out of my neck from sitting at that computer all day. Can be so helpful. So those are some of the ways I do that. And then once a quarter, I get with my girls and we go out to eat or get at someone's place, laugh. Laughter is good for the soul. So those are just some high level things that I do to take care of me.
Thank you. Sterling, do you have anything you'd like to share? You just sold a business, so can you share something?
Well, yeah, I did sell my business, but I am working at Shaw and I'm also a doctoral student. So time didn't really free up much, right? So it's still a lot of stuff to do. But one book that actually my former pastor, when I was in Georgia, has suggested is a book called The Tyranny of the Urgent. And it's by a gentleman named Charles Hummel. It's a really easy read. It'll take you maybe 20 minutes to read it. And basically the gist of it is a lot of things that we think are important are really just urgent, not important. So it teaches you to focus on what's important first versus what's urgent. Because a lot of times what you find out is what you thought was important really wasn't that important at all, right? And I really practice that, believe it or not, with my clients. You'd be surprised. Clients would call me up. Oh, Sterling, I had this issue with the bank. I need this by tomorrow. Well, you waited till today to tell me this, right? You could have told me this last week. So it's urgent to them or it's important to them, but it's really not important to me because I have other things to do, right? And what you find a lot of times is that when you're able to say no to stuff like that, turns out it was not really that important. The client say, you know what, I can talk to the bank and, see if we can push it back to next week. So those are the type of things that I think you have to set those boundaries, right? You have to set those boundaries. And like Bill, I'm a work in progress when it comes to work-life balance. And I do like to take time to enjoy my family. I'm married. I have 2 young children. So, I want to make sure that I'm available for them and I'm able to spend time with them. One of the things I do see a chiropractor regularly, just, for maintenance. I did have a back injury not too long ago. So I just make sure, I'm all healed up now, but I still go just for maintenance once a week. So, the joint has a really good plan. So that's where I go. And I'm trying to get back into old hobbies. I used to play golf. I haven't played in a while, so I want to get back into that. But yeah, I do take me time, just time to decompress. And during that time, I either, spend time in prayer or reading scripture or, I'm a sports enthusiast. So a lot of times I'm watching a game or, reading sports news, whatever it may be. Right. So yeah, I think that just if I can offer anything, definitely that book, The Tyranny of the Urgent by Charles Hummel. I think it helps you really look at boundaries and how to establish those boundaries and focus on what's important instead of what's urgent.
Excellent. Thank you. How about you, Tabitha? You have anything you can share with us?
Oh, yes, I would definitely love to share. The first thing I have is a planner. I have to have a planner, and it's only because I'm a mom. So I know there's a lot of people on the line who are moms, and especially single moms with multiple kids, and trying to run a business and raise children. Well, they're not young, they're teenagers. You have to have that balance. So if I don't have this book by my side or near me, I get off balance. And then on top of that, I take time for myself. I take time for myself every morning. Whether I do it at home or first thing if I get to the office, I make sure I meditate and I pray because I have to balance that energy out to be able to float my day, especially in the industry I'm in. And as for at least every other month, I am disappearing to the Delta Hotel or the Hilton for me time for a whole weekend. Or I'm traveling. So I get away, I travel either with the family and sometimes I travel alone. But if you don't incorporate those items in your life as a business owner, you're going to run yourself raggedy. So that is what my suggestion is, especially for the moms on the line. I know it's plenty of y'all up here. Please take that time for yourself. It is okay. You would not be a bad mom for doing it. It's going to make you more energetic to be able to handle all of it. So that's what I do. This go around with business.
Thank you so much. That was wonderful. The perspective of a mom. That was great. Thank you so much. Well, we're just about out of time. I want to thank the audience so much for being here. You all were very engaging, again, as you were last week. We want you to come back next week because we will address the trust, as someone mentioned. We'll talk about business valuation and try to go ahead and wind this series up.
I forgot to add one word, just one word: discipline, self-discipline.
Excellent. That is excellent. All right. You all have a good night. And Bill and Angie, I'll see you shortly. All right. Thank you all. Good night.